What if I told you that in 2026, money leaks don't just slip through your fingers? In today's hyperconnected, algorithm-driven world, these leaks are carefully designed to go unnoticed, quietly draining your bank account without you even realizing it. With AI, digital tools, and subscription models integrated into nearly every aspect of our lives, it's easy to fall victim to these invisible drains. They're small, everyday expenses that often go unnoticed, but they add up over time, eroding your savings and leaving you with less than you thought. In this video, we're going to dive into the top 8 modern money leaks that could be quietly draining your bank account in 2026. Stick around until the end for actionable tips on how to plug these leaks and take control of your finances. Let's jump into these hidden financial traps and learn how to stop them from silently sabotaging your wealth. 1. The ghost feature tier up. In 2026, many AI and software tools have a tendency to automatically upgrade users to higher tier subscriptions once they cross a certain usage threshold. This is a quiet trap that many fall into without noticing. It's easy to assume that the service you're using is still in the same pricing bracket, but in reality, you might have been bumped up to the Pro or Unlimited tier, which is often much more expensive. These tier upgrades are seamless, and once you've hit a usage threshold, whether it's streaming more content or using a service more frequently, you may find yourself in a higher tier plan that you don't really need. Set a monthly tier audit alert to remind you to check your subscriptions and downgrade them back to their baseline if your usage decreases. By staying on top of your subscription levels, you can prevent yourself from wasting money on unnecessary upgrades. It's a small adjustment, but over time, it can save you a significant amount of money. 2. Priority service micro-premiums. In the fast-paced digital economy, convenience is often the costliest thing. Skip the line, express delivery, and priority service buttons have become common offerings in many apps, from food delivery services to cloud storage and everything in between. These small $2 to $5 fees seem harmless in the moment, but over time, they add up. You might justify spending a couple of extra dollars for faster delivery or priority customer service, thinking it's not much. However, for a busy household or an individual who regularly uses such services, these charges can total $150 or more every month. Disable the one-click priority service in your app settings. By doing so, you'll stop being automatically charged for these convenience fees. It's a simple but effective way to reduce the unnecessary costs that pile up from these impulse-driven purchases. Every time you resist the urge to pay a little extra for convenience, you're actively taking control of your financial habits. 3. Idle digital wallet balances. With the rise of branded super apps like those for coffee, gas, and parking, it's easy to fall into the habit of preloading money into digital wallets in exchange for small discounts. You might load $25 or $50 onto an app to get a few dollars off on your next coffee or ride, which seems like a smart move at first. But what happens when you forget about those balances or don't use them up? The money is essentially dead money sitting in your account, earning no interest while inflation continues to erode its value. Switch to just-in-time funding instead of preloading balances. Only add money to your apps when you need it. This way, your cash remains in your primary account, earning interest or working for you in other ways, rather than sitting idle in a wallet. By reducing the amount of money you have tied up in unused digital funds, you can keep more money in your pocket where it belongs. 4. Dynamic pricing urgency traps. AI and dynamic pricing have become a norm in 2026, with retailers using algorithms to trigger a sense of urgency when you're shopping. The familiar, only 2 left at this price, or countdown timers are designed to create a panic buy environment. The problem is that these urgency cues often pressure you into making purchases at higher prices than you would pay if you waited. This feeling of urgency is tailored to your browsing speed and behavior, making it even harder to resist. Always use an incognito tab when shopping online. This simple habit can help you bypass many of the pricing tactics retailers use to nudge you into hasty decisions. By taking the time to shop without the pressure of dynamic pricing, you're more likely to make a well-informed purchase that saves you money in the long run. 5. Automated smart savings friction. Many fintech apps offer to help you save automatically by rounding up your purchases or setting aside small amounts of money for you every month. While this sounds like a great idea, there's a hidden cost to using these services: the management fees. Many apps charge a small fee, often $1.99 per month or more, for automating your savings, which might seem negligible at first glance. However, if you're only saving $20 a month, that $2 fee represents a 10% tax on your savings progress. Use your bank's free native automation tools instead of third-party Save4You apps. Most banks offer free options to set up automatic transfers to savings or investment accounts, and these won't come with the management fees that third-party apps charge. By taking advantage of the tools that your bank provides, you can still automate your savings without losing money to unnecessary fees. 6. Unbundled hardware subscriptions. In 2026, even physical products like home security cameras, printers, and appliances often come with a Cloud Connect fee, turning a one-time purchase into a recurring monthly subscription. These fees can catch you by surprise, transforming what you thought was a one-time purchase into an ongoing financial burden. For instance, a smart camera might require a $10 per month subscription just to access its cloud storage, or a smart printer might charge for ink replacement through a subscription model. These hardware taxes are becoming more common, but they turn what should be a one-off expense into a permanent monthly liability. It's a subtle but insidious way that companies continue to make money off you long after you bought the product. Prioritize local storage or subscription-free certified hardware. By investing in devices that don't rely on cloud services or require a monthly fee to function, you can save money in the long run. These products may cost a little more upfront, but they won't tie you into a monthly service fee, making them a better financial choice over time. 7. Geofence nudge spending. With the rise of location-based marketing, retailers can now send instant coupons directly to your phone the moment you walk near a store or mall. While these coupons seem like a great deal, they're often designed to trigger spontaneous purchases. You might receive a notification offering a $10 discount on something you weren't planning to buy, leading you to spend $40 just to save $10. This type of impulse spending is more common than you might think, and it adds up over time. The best way to stop these geofence nudges is to turn off location-based marketing in your phone's privacy settings. By disabling this feature, you'll stop receiving these unsolicited offers that encourage unnecessary spending. It's a small adjustment that can help reduce the temptation to spend when you weren't planning to. 8. The legacy tax on insurance. Insurance rates, especially for home, auto, and cyber-like coverage, are often subject to frequent changes. In 2026, with AI-driven risk modeling, insurers are constantly adjusting their pricing based on new data. The problem is that staying the same provider for more than a year often means you're paying higher rates based on outdated risk data. This legacy tax occurs because you're no longer benefiting from the most current pricing model, even though your needs may have changed. To combat this, use a debundling bot to reshop your individual policies every 6 months. By reviewing and adjusting your coverage regularly, you can ensure that you're always paying the best rate for your needs. This habit helps prevent you from being overcharged based on outdated information, saving you money and ensuring that your insurance is always aligned with your current situation. There you have it, the top 8 money leaks that quietly drain your bank account in 2026. These hidden drains are often small and hard to notice, but they can add up over time and quietly erode your wealth. By taking the time to audit your subscriptions, limit micro premiums, manage idle balances, and use better pricing strategies, you can keep more money in your pocket and improve your financial stability. Start applying these fixes today, and you'll be amazed at how much you can save. Remember, every small adjustment counts, and over time, these habits will help you plug the leaks in your finances. Take control of your money now and stop these silent drains from affecting your wealth.